What up, Hyperchange? Welcome to another episode of Moonshot Monday. Today I'm going to pitch that Facebook should buy Coinbase. Now, before we get too deep into it, I want to just start by mentioning a piece of news, a headline that I read 2 weeks ago that has not gotten enough love from Bloomberg, a report that said Facebook is developing a cryptocurrency for WhatsApp transfers, sources say. Now, this is the last piece of news we've seen in a long string of hints about Facebook exploring blockchain technology and launching its potentially own coin or token or cryptocurrency. And so now this article from Bloomberg gives us the most in-depth detail on what that actually looks like. And according to Bloomberg, Facebook is prepping the launch of a stable coin specifically on WhatsApp for the remittance market in India. So what does that mean? Facebook is essentially wants to launch its own cryptocurrency, which is a stable coin, which means the value of that cryptocurrency is pegged to another asset that's stable. Usually this means like the US dollar. There's already examples of stable coins in the crypto ecosystem like Tether or like DAI. And so this is, a category of cryptocurrencies, and particularly Facebook's strategy here is to develop this stable asset that makes it very easy to send international remittances. So the remittance market is a huge multi-hundred billion dollar market globally where people send money back and forth. Let's say I'm working in the US and I have my relatives in Italy and I want to send them money back home. I send them a part of my paycheck every month, and that is a remittance. And the fee charged on that is a massive market and very inefficient. And this has been touted as probably the lowest hanging fruit in the real world crypto space is, okay, if you're so good at payments, if you're so good at sending money instantly anywhere in the world for really cheap, then you should be able to displace the remittance market. Why is this such a low hanging fruit? So if you take a look at this report from the World Bank of remittance prices worldwide, the average price of sending a $200 remittance around the globe was 7%. So they're taking $14 out of every $200 to send it. So this is a massive fee. You think your 2 to 3% ATM fee or credit card fee is bad. The remittance market is tremendously inefficient, and actually I thought it was really funny, actually went up in Q4 to 7% from 6.94 in Q3. Although the overall trend, this chart is really great, shows there's been a pretty consistent downtrend in the average remittance fee, probably due to competition and technology. But the point being is that is still a juicy number. 7% is the average cost for a remittance. So that is why Facebook is saying like, wow, this is a low hanging fruit for us to disrupt. And why Facebook and why on WhatsApp and why in India? Well, India is the world's largest remittance market with $69 billion being sent annually back into the country. Facebook is in a particularly, perfect place to take advantage of that because their WhatsApp service already has 200 million users in India and 1.5 billion users around the globe who might want to send money back. So Facebook already has all the people in India on its platform already. If they could just launch this stable coin, then they could facilitate, potentially get a huge chunk of the remittance market almost overnight. And then, this is just the first step of Facebook's cryptocurrency and stablecoin ambitions. And my guess, they're probably going to start expanding to other countries around the world once this works. Even I did a really quick back of the napkin sort of spreadsheet just to calculate how much revenue they could do. And even if Facebook charges just 0.5% of a transaction, that's less than 1/100th of the cost of the current average remittance. And actually, it is important to point out the average remittance in India is slightly lower than the global average. It's about 5.7%, I believe. But still, Facebook could undercut that by offering 0.5% fees. And so in this scenario, let's say they only capture $1 billion of that 69 billion sent, that 0.5% fee would be 5 million. But if they capture half that remittance market, 35 billion, we're looking at about 175 million in just revenue from just the India remittance market. So this could remittances alone could quickly become a multi-billion-dollar business for Facebook if they decide to charge, even something very small like 50 basis points. There's a huge opportunity for disruption, for mainstream adoption. I mean, Facebook and just big tech companies in general are in a very unique position to really get crypto to go mainstream because they already have all the users. They already have all the accounts. You're already logging in all day. Just adding that simple payments and financial infrastructure step seems like the logical next thing to do. And even from a not revenue generating standpoint, Facebook's user base has been slowing growth dramatically. If they can integrate a payments and banking system that you actually want to use, then that's a reason to log into their platform. And that alone, even if they don't charge revenue for it, could justify launching this entire product. And here's where it gets juicy, and here's where it ties into Coinbase. A little history story. Back in 2014, Facebook poached somebody from PayPal by the name of David Marcus. And ironically, back when I was writing for Seeking Alpha, actually published this article about how Facebook was making a move into digital payments and particularly was ready to attack the remittance space because David Martin was poached from PayPal to integrate payments into Facebook's messaging app. And he was a huge Bitcoin proponent. He was on the record multiple times saying how big of a fan of Bitcoin he was. That was 4 years ago. Now, fast forward to 4 years ago to head today, take a peek at David Marcus's profile on LinkedIn. He is the blockchain expert. He is leading the blockchain group within Facebook, which apparently, according to Bloomberg, has about 40 people working on it. So now, it's all sort of coming together. Facebook has been laying the groundwork to set up a massive financial payments infrastructure and launched a cryptocurrency on top of it with David Marcus leading the charge. And the final puzzle piece here is in December of 2017, guess who joined the board of directors of Coinbase? David Marcus from Facebook. So there's so many clues going on right now. Facebook wants to launch its own stablecoin. David Marcus is joining the board of directors of Coinbase. It's clear to me that Facebook wants to make a move into payments. They see the opportunity of crypto. They see the ability to leverage their 2 billion users to immediately gain mainstream adoption of this asset. So this is incredibly exciting. And I think Facebook, remittances is one thing, and that's a very attractive business opportunity, a huge market. But the real holy grail that Facebook's going for here, I think, is being this new digital bank of the future and really disrupting the financial industry as a whole and really allowing people to do their banking via Facebook's platform. And this would make it so sticky. Like, think how much you hate your bank. I hate Bank of America, but I still use it because it's so annoying. It's so entrenched. So why should they acquire Coinbase? How does this fit in? Coinbase is one of the largest and most trusted crypto asset holding banks. They originally started allowing you to buy and sell Bitcoin. They've expanded to all sorts of other crypto assets. They're funded by like Andreessen Horowitz, all of the top VCs. Their CEO, Brian Armstrong, is super young, one of the biggest leading visionaries in crypto. So Coinbase is continually considered the most trusted, well-respected, legitimate brand in the crypto space, at least in my opinion. And that makes them a perfect fit and synergy for a company like Facebook. They're also both right there in San Francisco and Silicon Valley. And I think Facebook could leverage Coinbase to really become this financial infrastructure crypto company that's not just doing remittances, that doesn't just have a stable coin, but that has a stable coin that lets you do remittances and then lets you change that stable coin into whatever other digital asset you want. Let's say it's Bitcoin. Let's say it's Ethereum. Let's say it's a CryptoKitty. Let's say eventually we tokenize stocks like Tesla and Apple and Amazon, and you can transfer your stable coin directly into whatever financial instrument that is, whatever, Tesla stock. And you could do this all on Facebook's platform. And I think a way to turbocharge this sort of payments, banking, financial software package that Facebook is working on is to buy Coinbase and really get the other crypto banking piece of this. So it's not just a stable coin to do remittances. So anyway, I hope this all makes sense. I'm still trying to put all the pieces together because there's so much going on here. But the bottom line is Facebook is looking like it's ready to launch a stablecoin in India. This is going to be the biggest news to drop in crypto in years, in my opinion. It could, in fact, catalyze an entire bull run of the crypto ecosystem if Facebook makes it easy to then transfer from that stablecoin into other things like Bitcoin or other of the decentralized assets. I mean, who knows where this can go? And I think Facebook could really take a leap miles ahead of anybody in this space if they want to be a digital bank of the future by acquiring Coinbase. And I've actually already put out a Moonshot Monday about why PayPal should acquire Coinbase, and the value of Coinbase has gone up like 10x since I made that episode. So I think somebody needs to buy Coinbase. They are the bank of the future. They're either going to get acquired or get way too expensive to be acquired and make it on their own. And I think Facebook, Facebook has 40 billion in cash as of the last quarter. They could shell out 10 or 20 billion, buy Coinbase. The multiple of Facebook stock right now is down in the dumps. Nobody believes in it. Everybody's down on the privacy and data concerns. They need to reignite and pivot investor sentiment. I don't think there's a better way to do that than to get people excited about them becoming a digital bank of the future, them becoming a hybrid crypto payments company. Like, I think this is the pivot that Facebook needs to sort of reinvent itself and get that growth multiple again. So I think this makes a ton of sense on a lot of different levels. Would love to know what you all think in the comments below. Should Facebook buy Coinbase? Are they really launching their own crypto asset? Let me know. This is Hyperchange. I'll see you guys next time. Peace.